Hello and welcome. Infrastructure Concession Regulatory Commission (ICRC) and Corporate Affairs Commission (CAC) have jointly emerged the most compliant companies in terms of Freedom of Information (FOI), while the Nigerian Extractives Transparency Initiative (NATI) came third on the ranking. The organization were named joint winners by the Public and Private Development Centers (PPDC) during the launch of the 6th Freedom of Information Compliance Ranking in Abuja. The program is the portfolio on NTA News 24 Abuja. Glad to have you join us today. I'm Chimobi Walter Naji. Welcome back. Our focus on this week's edition is on the India-West Africa Conclave held in Abuja, where over 70 businesses from India are looking to invest and do businesses in Africa. But first, Comfort Amodu is standing by with the business news segment.
Thank you, Chimobi. Good to have you join us. The IMF has warned of rising risk to global economic growth. Now, global growth is seen to be slower than earlier projected as trade disputes continue to take a toll on major economies. However, the International Monetary Fund (IMF) is projecting rising growth in Africa despite a slower global outlook. Finance and economy correspondent Leah Katun-Babatunde, who took a look at what this implies to Nigeria and Africa, says global growth to remain steady at 3.7% in 2018 and 2019.
IMF projects that growth will slow by 0.2% over figures it presented 6 months ago. African growth is projected to reach about 4%, but the IMF is concerned that the rise is insufficient to meet the Sustainable Development Goals expectation that is geared towards fully developing a rapidly growing workforce.
While different economies face different challenges, there is a real need for very thoroughgoing and ambitious structural reforms in Africa that would raise efficiency, bring people, particularly young people, into the labor force. In many countries where debt is high, put it on a more sustainable.
The IMF, however, warned that the uncertainty caused by trade dispute could lead to firms to delay or relinquish capital spending and therefore slow down growth in investment and demand.
Nigeria's growth 1.9% this year, 2.3% next year. South Africa only 0.8% this year. Angola contracting by 0.1% this year. So the aggregate is over 3% this year, close to 4% next year, is despite the largest economies in the continent moving forward.
And the IMF World Economic Outlook already projects global growth will slow to 3.6% through 2022 to 2023. Moving on, more than 3,000 persons have benefited from the federal government's interest-free loans of 15.183 billion naira. Vice President Professor Yemi Oshibajo, who disclosed this at the 9th Presidential Quarterly Business Forum in Abuja, said each of the beneficiaries got between 50,000 to 350,000 naira under the scheme.
The first way of creating jobs is by enabling the private sector to do business easily, to do what it does best, so that opportunities are created in agriculture, in the agro-allied industry, in services, in manufacturing, and in all the other areas that the private sector is dominant.
The Vice President maintained that the present administration is determined to ensure that regulators play their roles as facilitators and not impediments to business. In the meantime, Governor Central Bank of Nigeria Godwin Emefiele says the Apex Bank may reduce MTN's $8.1 billion fine imposed on the telecommunication company. This, the CBN governor said, may be reviewed following the documents that was presented to CBN by the telecommunication and other parties involved. Meanwhile, the governor said CBN will continue to intervene in foreign exchange markets to ensure a stable exchange rate. And with that, we wrap up the news segment. Many thanks for watching. I'm Comfort Amadou.
Welcome back to the program. Now, since the present administration took over in 2015 under the leadership of President Muhammadu Buhari, the country has made countless efforts to engage in economically viable relations with the international community. The administration came in at a time when Nigeria was slipping into its worst recession in about 2 decades, as oil was sold below $30 per barrel, crippling the entire economy, which was over 90% dependent on oil. Now, one of the areas Nigeria focused on was in building strong bilateral ties with other countries. Nigeria and India had been doing business for over 5 decades, with trade relations running into billions of dollars annually. India and West Africa have a combined population of around 1.7 billion people and a combined gross domestic product of around $3.1 trillion, setting the stage for taking the India-West Africa relationship to the next level. The combined GDP of the 15 economic community of West African states, member countries with a population of over 370 million people, is estimated at over $0.5 trillion. How has Nigeria benefited from this relationship, and what is the impact on the nation's economy? I have with me in the studio Ambassador Gurjit Singh, a former ambassador from India to Germany and the African Union. You're welcome to the program.
Thank you, sir.
All right, so no fewer than 200 delegates, of course, from over 15 African nations, alongside 70 business representatives from India, leading businesses and global brands, are in Abuja for this conclave. What is the contribution of India to the economic development of Africa?
Well, the India-Africa story is a very long one.
Yes.
And our story is not only political, it is cultural, people to people, and a very strong economic engagement. The earliest linkages between India and Africa were actually those that came with the trade winds. So it was traders who set up much of what we did together. Now, what we have is your question. What is India's contribution? Our contribution is that we listen to our African brothers. We listen to what we feel are their development priorities. And then India tries to contribute to the engagement so that we try and work with you to achieve your development priorities. Now, this happens in about 3 ways. One is at the governmental level. One is the development cooperation model. And the third is through private sector business. So I think we are working on all 3. And when we say that we are ready to work with you, what we mean is we will transfer technology, we will build local capacities, we will create local employment, and we'll contribute to the development of your national priorities. I think that is in sum, what India's contribution to Africa is.
Okay, so what is the volume of this relationship? Over time, Nigeria and India, and of course, indeed, the West African countries have had a lot of trade relations with India. What is the volume of these particular trade relations as it relates to both education, technology, and all of that?
If you look at the pure trade, then the trade between India and Nigeria is something to $7 to $9 billion annually. And if you add ECOWAS countries, then it becomes $1 million more. But you have to understand that this is the same level of trade that India has, say, with Russia, Japan, or Germany. But there our trade is far more diversified. In the case of Nigeria, most of our trade is simply import of oil. Now, we need to diversify this. We are not being fair to the people of India and Nigeria when we say that we only have trade of oil. We need much more diversity. And not only diversity in trade, but we also need to bring in more technology, cross exchanges of investment, and contribute to human resource development and capacity building. I think that is the fulsome matrix that we need to build on, whose potential has not yet been tapped.
Okay, so the event is designed to consolidate on the healthy balance of trade between India and, of course, that of Nigeria and the rest of Africa. What measures are put in place to ensure that, the issue of dumping does not even come up in the first place?
I think in today's deliberations, actually, not much of this was discussed. So, trade imbalance is not something that we are now looking at. We are looking at trade expansion, yes, economic partnership, investment expansion. Now, we live in an interesting world. Today, the champions of globalization have withdrawn, and the protectionists are becoming champions of globalization. Now, when everybody is finding new ways of engaging, it is time for the steady partnership between India and Nigeria and India and ECOWAS countries to find a new level of engagement. So it's like if you let a river flow, it keeps flowing quietly. But if you build a check dam, you can direct it into constructive manner. So I would say the conclave today is actually trying to create a diversion whereby the waters of our relationship flow into more beneficial areas. Now, what are these beneficial areas? Nigeria is a very big investment opportunity for infrastructure. That is one. There's agriculture. There's human resource development, schools, colleges, capacity building. Then India and Nigeria and India and ECOWAS both have very young populations. And all these young people are aspirational. 68% of the people of India are young, 64% of Nigeria are young. So these are very heavily young populations. We need to find ways for them to be employed constructively. Now, these don't have to be simply government jobs. They can also be entrepreneurship. So these ideas are the kind that we have been looking at.
So in what areas, really, do we expect to see improvements in these relationships between the two countries? What specific areas do we expect?
I would say that there is infrastructure as a very big opportunity.
Yes.
Indian companies have come. But today we are looking at higher levels of financing and seeing how we can build more infrastructure projects by Indian companies jointly with Nigerian companies. Similarly, we also want to contribute to manufacturing. But I think the big boost can come in services, the digital economy, the startups, the social entrepreneurship. These are the kind of things we want to bring in. The India's soft loans to the ECOWAS region is about $2.2 billion, and we are running 68 projects in some of these sectors. The idea is, can we do much, much more? Can we have new avenues of financing? Can we have better PPP models? And then take this whole relationship to a great, grand new level.
Okay, so we understand that about 70 businesses from India are coming in for this conclave. What are the areas that these businesses are domiciled?
Well, I saw some of them today. They have come in the areas like schools. Okay. They have come in the areas like power, renewable energy, in construction, in thermal power besides renewables. And we have many other people who are now saying that we want to do the health sector, we want to do the software sector, we can look at biometrics based applications. So there is a huge diversity of engagement that Indian companies have brought with them today.
So you talked about earlier, you talked about the areas of, what do you call it now, energy, renewable energy. Yeah, so in what areas really can Indian companies help, in boosting the renewable energies that Nigeria really wants to help to bring into the country and boost our economy too?
At the Paris Conference on Climate Change, India made a grand commitment that we will create capacity of 175 gigawatts of new solar plants. Yes. And we are on the way. Now, we have also launched something called the International Solar Alliance, of which Nigeria is also an invited member. We are ready to support our partners in the International Solar Alliance to also partake of India's ideas and say, let us set up more solar energy plants. Do you know in India, we have entire airports, entire railway stations, all run by solar. And we are having solar rooftop projects for houses. And we are working with countries like Germany, for instance, in developing these. But we have our own indigenous industry. What we are now offering that under India's line of credit commitments made at the last India-Africa summit, 20%, which is about $2 billion, will be given to our partners in Africa in case they want to pursue the solar options. So we are not only offering an idea, we are offering technology and financing to see what best can be done. For instance, the university can be, actually energy neutral. You have so many avenues to put up solar plants over there. These are the ideas we need to pursue.
Okay, so as a way of really rounding up this discussion, because we really don't have enough time, in this program, but then let's talk about ICT. In the areas of ICT, what relations can we really get from India?
Today, ICT, or the digital revolution, permeates every aspect of our lives. So one of the areas where India is bringing direct benefits to its people is through the Aadhaar card, which is a biometric solution whereby it's linked to your bank account, and over 300 million people who were not part of the economy today have bank accounts which are digitally mastered. And today the subsidies that government gives them go directly into their bank accounts without any leakage. On the other hand, there is a consumption model which is called e-commerce. So you can have e-commerce models which India has aplenty. And we have Flipkart, which is a domestic model valued at $16 billion. We have a local Amazon, and we have many more. So whether you have consumption patterns or you have development patterns, the whole spectrum, India is ready to engage with Nigeria. And if Nigeria wants to work on the biometric governmental thing, India will offer it free of charge.
All right, thank you very much. I've been speaking with the former Indian ambassador to Germany and the African Union, the Ambassador Gurjit Singh. You're welcome to the program, and thanks for joining us.
Thank you.
All right, so we will now join Joy Uzo for a review of the capital markets. Do stay with us.
It's good to have you join us on the Capital Market Review segment. I am Joy Uzo. The market opened for 4 trading days last week as the federal government of Nigeria declared Monday, 1st October 2018, a public holiday to mark the 58th independence anniversary. Meanwhile, a total turnover of 639.317 million shares worth 7.842 billion naira in 10,477 deals were traded last week by investors on the floor of the Nigerian Stock Exchange. The NSE or share index and market capitalization depreciated by 1.17% to close the week at 32,383.15 and 11.822 trillion naira respectively. Similarly, all other indices finished lower with the exception of the NSE oil and gas index that rose by 1.13%. while the NSE ASEM index closed flat. The financial services industry measured by volume led the activity chart with 517.865 million shares valued at 4.654 billion naira, traded in 5,977 deals, contributing 81.00% and 59.35% to the total equity turnover volume and value, respectively. The consumer goods industry followed with 54.733 million shares worth 2.526 billion naira in 1,703 deals. The third place was conglomerates industry with a turnover of 14.752 million shares worth 25.560 million naira in 452 deals. Trading in the top 3 equities, namely First City Monument Bank, Fidelity Bank PLC and Guarantee Trust Bank, measured by volume, accounted for 267.466 million shares worth 2.592 billion naira in 1,733 deals, contributing 42.00% and 33.05% to the total equity turnover volume and value, respectively. Also traded during the week were a total of 49,238 units of exchange-traded products, ETPs valued at 807.376.95 naira executed in 5 deals. A total of 2,155 units of federal government bonds valued at 2.113 million naira were traded last week in 12 deals. 27 equities appreciated in price during the week under review. 32 equities depreciated in price, while 110 equities remained unchanged. Meanwhile, stocks in the United States closed lower on Friday after a rapid surge in bond yields dampened investors' optimism for equities. Dow Jones Industrial Average declined 0.68%. S&P 500 dropped 0.55%, and the Nasdaq Composite Index also depreciated 1.16% to close at 7,788.45. European equities also ended Friday on a negative note, with the FTSE 100 depreciating 99.80 to close 7,318.54 basis points. German DAX 1.08%, and the Francis CAC 40 dropped 0.95% to close 5,359.36. Thanks for watching. I am Joy Uzo.
All right, thank you, Joy. And that ends this week's edition of the program. But don't forget to keep your comments coming on the platforms showing on your screen. I'm Chimobi Walter Nnaji. Do have yourself a pleasant week.